Yes, good morning. Today we are going to see bank reconciliation statement, also known as in short term we say BRS, bank reconciliation statement. Let us see what we mean when we say reconciliation. Reconciliation means to find a solution. When you have to find a solution, you need to find a solution when there is a problem. For example, if you get the problem with your friend at school, the next day you can reconcile with your friend in order to keep on your friendship. Similarly, there is a problem between the cash book balance and the bank statement balance. These two balances, the cash book balance and the bank statement balance, should be the same. In some cases, these two balances do not agree, and therefore we have to prepare a bank reconciliation statement to reconcile the difference between the cash book balance and the bank statement balance. A cash book is prepared by a business and a bank statement is prepared by the bank. The cash book and the bank statement, in normal circumstances, they should contain the same information because the cash book is being prepared by the business and the bank statement is being prepared by the bank. The same information will be recorded in both the cash book and the bank statement. Now, if I have 10,000 rupees at the bank, for the business it will be a receipt, it will be recorded on the debit side of the cash book, balance Jismil at bank. And the same information, this balance BD, on the debit side of the cash book will be recorded in the bank statement on the credit side. A credit balance in the bank statement indicates that the business has cash at bank. When the business deposit money into the bank, it will be recorded on the credit side of the bank statement. What is a bank statement? A bank statement indicates the details of transaction between the business and the bank. These two balances should agree. A debit balance in the cash book will mean a credit balance in the bank statement, and a credit balance in the cash book will be indicated by debit balance in the bank statement. A credit balance in the bank statement indicates that the business has cash at bank, and a credit balance a debit balance in the bank statement indicates that the business owes a bank. So a credit balance in the bank statement will be indicated by a positive sign, and a debit balance in the bank statement will be indicated by a negative sign. At times, the students confuse with bank account and bank statement. A bank account and a bank statement, they are not the same. A bank statement indicates the details of the transaction between the business and the bank. Now, in order to understand properly bank reconciliation statement, we are going to see a work example. So just to remind you, whatever is recorded on the debit side of the cash book will have to be credited in the bank's statement. Whatever appears on the credit side of the cash book will be indicated on the debit side of the bank statement. The cash book will contain only one column, that is a bank column. We are assuming that we are using only check for business transaction. Now let us see together the work example. A question will be given, then we will try to explain to you how to prepare the updated cash book and bank reconciliation statement. Here we are. On the debit side, we have balance in the cash book. This is the cash book of the business. We have balance 5,000,000. And we receive a check from Robbins Cat Mill. Once the check is received, the business will have to deposit it into the bank. So therefore, in the bank statement, this Cat Mill dollar will be indicated on the credit side of the bank statement. Then Jack 2,500 will be indicated on the credit side of the bank statement. 6,000, this also will have to be recorded on the credit side of the bank statement. But still the bank has not yet recorded the 6,000,000 received from PAC. And then suppliers, we pay suppliers in terms of check 400, and then we have in the bank statement, it will appear on the debit side 400. Winner 700, it will appear on the debit side 700. Dream Price Mill, we pay Dream Price Mill, and it has not yet been recorded by the bank in the bank statement. Now, first of all, what we have to do, we have to see whether all items which are on the debit side of the cash book, whether they have been recorded on the credit side of the bank statement. Forget about the balance. We have Cat Mill on the debit side, therefore we have Cat Mill here, we put a tick. 2,500, we have 2,500 here, we put a tick. Then 6,000,000 has not yet been credited. This one is known as uncredited check. It has not yet been presented to the bank. And then we have 400. On the debit side also we have 400. Good. 700. We have 700. Mill not yet debited. This one is known as undebited. Undebited, or what we call unpresented. Undebited check. So first of all, we have to see whether all items on the debit side, they have been recorded on the credit side. And all items on the credit side, whether they have been debited on the debit side of the bank statement. Now, when preparing the cash book, we got a balance 15,400, which indicates that the business has cash at bank 15,400. When the bank statement has been received, we see that the bank is indicating a balance of 19,600. So the bank is indicating a balance of 19,600 and the cash book balance is 15,400. These two balances are not the same, they do not agree, therefore we have to prepare a bank reconciliation statement to reconcile the difference between the cash book balance and the bank statement balance. So this balance, the cash book balance, is not good. Therefore, we have to prepare again the cash book. So, we have to prepare an updated cash book. At times we call it revised cash book. So, we will start with the closing balance. 15,400 will have to be debited in the updated cash book. And then we will see in the bank statement, there are some items which have not been recorded in the cash book, in the original cash book. For example, charges. The bank has charged with some charges on all items which are on the debit side of the bank statement. They will have to be recorded on the credit side. Therefore, we have charges with some. Credit transfer. This mill on the credit side of the bank statement, it will be recorded on the debit side of the updated cash book. Only these two items were missing. Therefore, we balance this updated cash book. We obtain a closing balance of 24,600. Now we are going to prepare the bank reconciliation statement. We will start with updated cash book balance, 24 600. Add unpresented check, what we call undebited check, dream price, lavé, 1000, and less uncredited check, uncredited, we have 6000, pack, and then 24 600, we add 1000 and less 6000, this will give us bank statement balance, 19 600, therefore this balance tally now, 19 600, and here we have 19 600. So this is a work example. The cash book will be given to you in the exams and the bank statement. What you have to do, you have to see whether all items which are on the debit side have been credited in the bank statement, and all items which are on the credit side of the cash book have been debited in the bank statement. So items which have not recorded, which have not yet been recorded in the cash book, so you prepare an updated cash book. We have to record these missing items in the updated cash book, then we balance the cash book, then we prepare the bank reconciliation statement. So in the exam, you will be given your question, and then you just have to prepare your updated cash book and bank reconciliation statement. Now, we are going to make a recapitulation of what we studied so far concerning bank reconciliation statement. Why we prepare bank reconciliation statement? To explain the difference, to reconcile the difference between the cash book balance and the bank statement balance. A credit balance in the bank statement will be indicated by a positive sign. A credit balance in the bank statement means that the business has cash at bank. A debit balance in the bank statement means that the business owes a bank. And we have to see in the question the cash book given to you and the bank statement. What we have to do to see whether all items on the debit side of the cash book have been recorded on the credit side of the bank statement, and all items which are on the credit side of the cash book have been recorded on the debit side of the bank statement. And then we have to find undebited check and uncredited check. Once this exercise is completed, then you prepare your updated cash book, which will record all the missing items in the original cash book. So we prepare the updated cash book, and then we balance it, and then we prepare the bank reconciliation statement to explain the difference between these two balances. So here we are concerning bank reconciliation statement. In the next lesson, we are going to see manufacturing account. Thank you very much.